A data deluge is a way we can probably talk about all of the information that came at the markets. And generally during August, the traders are out at the Hamptons and the computers are running everything. But there is a lot of information that came out, and a lot of it most recently was about inflation. And you can go back and argue that Trump's win was in part because of high inflation, and the promise of lowering inflation has been part of this conversation. And tariffs, and will it be inflationary? This is all unknown at this point. But we did get a lot of data this week, including the PPI and CPI and import prices, and even on Friday, retail sales.
That's right. There was a lot of information that came at us related to that topic of inflation. Just a couple of years ago, remember when inflation was running at 9%? And we've come a long way since then. There was a slight increase in consumer price inflation. A lot of that was driven by this kind of interesting thing with rent prices. So there's this concept called owner's equivalent rent, where the Bureau of Labor Statistics, they ask people, hey, how much would you rent your house to yourself for? And
which is silly, but okay.
It is, right. Because it's like they ask me, I'm like, I'm a horrible tenant. So, I'd probably charge a huge price. Exactly. But, they asked this question, and that helped drive the inflation rate a little bit higher. We have been seeing this almost tug of war between service price disinflation, so going from like 4% down to closer to 3%. But yet goods prices, that inflation going from negative, so deflation, to positive. Now, some of that could be due to tariffs, but not most of it. We also got this week not just consumer price inflation, but producer price inflation and import price inflation. So you can actually begin to see how it is that tariffs, if at all, are percolating through the system.
So let's go back to the first part, consumer price index, the CPI, the consumer. That went up because of this rental equivalency and energy prices, right? So a lot of times you hear, well, strip that part out, right? Which is obviously what most of us spend our money on, is energy and food prices. And so pull that part out, that was CPI. But the PPI, the Producer's Price Index, for those of you who are keeping score here, that is the input prices. I looked at it. Now, I don't have a PhD like you do, but I looked at it and saw trade imbalances was a part of that, number one. And number two, which was really interesting to me, was the cost for investment advice, right? Did you see that?
Yeah.
And so, of course, when the markets go up and managers make more money when the market goes up, that plugged into PPI.
That's right. That's one of the things that a lot of people probably don't appreciate, is how it is that some of that inflation is really measured. When you do well on your investments, the operating expenses of, if it's in a mutual fund or exchange traded fund, it's usually stated as a percent of the assets under management. And so if the market goes up, that fee goes up, and that's a form of inflation. That's probably a type of inflation most people probably don't mind, right?
Or don't see.
Or they don't see, exactly. Right. Yeah. Now, in terms of the PPI, we can also look at it as far as, is it from unprocessed goods, processed goods, or finished goods? And when I look at the stage of production, that's what that's called, is you can see that inflation from tariffs are maybe beginning to show up in the unprocessed goods, but it's up and down and more driven by things like weather. For example, you had raw milk prices being a big driver of the increase in the PPI for unprocessed goods. You also had coffee prices, and coffee has been really affected by crop harvests and things like that. Where another big driver of producer price inflation, kind of the upside surprise, was the profit margin between the retailers and wholesalers. So when they buy the stuff from the producers and then they sell it to the final consumer, their margins actually expanded last month. We've seen this before, and what often happens is it expands one month and then it goes the other way the next.
Yep. So there's a couple of reasons why we spent a number of minutes talking about this, because obviously it affects everybody if prices go up, and that's what inflation is, right? What does it mean to their bottom line, their pocketbook? And secondarily, what will the Fed do about it, right? And if the Fed then makes a change to interest rates, then that would affect people's stock and bond portfolios. And the other thing would be real estate. That's another risk asset. And a lot of real estate sellers want that interest rate to come down because, of course, that makes it more affordable for them.
That's right. If you look at the cost of buying a home, it's not the sticker price of the home. It's how much does it cost to finance it? How much does it cost to insure it? We know that insurance prices have gone up, and a lot of that could be due to various disasters that have taken place, increased cost of reconstruction. But that interest rate, that 30-year fixed rate mortgage, that's a really good barometer for whether or not the housing market is going to unclog or not. It has come down to close to around 6.5 to 6.6%, which is off of where it was just a couple months ago, closer to 7%. And it might not sound like that's a big deal, but for many buyers, that could be a matter of, couple $100 a month in terms of your mortgage payment. So that could make a huge difference if when the Fed meets, with the next meeting is September 16th and 17th, if they start cutting and signal that it's a process that they're going to be walking down this longer path of cutting, not just a one and done kind of deal, that could help the mortgage market, which then in effect should help the housing market.
Exactly right. Folks, Annex Wealth Management, which is investment and retirement planning, tax planning, and estate planning. And we can serve you in 3 different ways: through comprehensive wealth, through private client, and Annex Ignite.